Hi, I'm Mike Staten from Staten Mortgage and Protection Specialists. It's Monday night again, so I'm going to do another Facebook Live. This week's Facebook Live is about what's dominated the headlines in the mortgage world, and that is something I've seen quite a lot of over Facebook, social media. People having their own opinions on it, and it's all about the affordability calculate. Well, the headlines have been the affordability calculations are being scrapped by the Bank of England. So I'm going to give my thoughts on that very shortly. Again, my thoughts are my own opinion. It's not mortgage advice, and it doesn't 100% mean that it is accurate. These are my own opinions, and I'm going to go through that with you. It's been a fantastic week for us at Staten Mortgages. We're looking at doing a record month. We've already done over 175 £1 million worth of lending since we started back in 2018, and we're hoping to break the £200 million barrier very soon as a business. And on Thursday, just gone, we were runners-up in the National Family Business of the Year. And on Friday night, we had a fantastic evening at the Mansfield 2020 Business Awards for 2022, where we made the finalists for the Entrepreneur Spirit, where we made the finalists for the Customer Focus Initiative, and we actually became highly commended in that, and community service as well. So community spirit, something that's very close to our heart, and it's one of the reasons as soon as we became a strong enough business that we was able to give back to the community. So it's been an absolutely fantastic week for Staten Mortgages. One of the main reasons that I do these videos on a Monday evening is because Claire, she has an evening appointment on a Monday night, and she's currently doing an evening appointment now for a client that wasn't able to get booked in during the day because of their work commitments. Also, Nikki's at home doing her evening appointments over Zoom as well. So just to let you know that we can accommodate people. Doesn't matter what hours of the day you work, there's an appointment slot somewhere in the day for you and for our team. So onto the headline, and the headline being mortgage affordability calculation scrapped. Personally, it's clickbait. I saw something on Lad Bible, and it was actually headlined "Mortgage Affordability Scrapped." It's not true. So there's several methods used for lenders to do mortgage affordability. Now, the Bank of England introduced something when the mortgage market review started, and they did something called stress testing. Now, what stress testing is the lender testing your affordability based on an increased interest rate, which is 3% over their standard variable rate. So let's just say, let's say the Halifax, for instance, let's say they have a standard variable rate of 4.99%. If they was to stress test your mortgage calculations, that would mean that they are testing your mortgage at an interest rate of 7.99%. They are making sure that you can afford an interest rate of 7.99%. So whether or not you can see it advertised at 2% or 3%, they are testing it at 3% above the stress testing rate. So you do sometimes see a lot of people put on there, well, I can afford £1,000 worth of rent, but they're telling me that I can't afford an £800 mortgage. Well, that's because your £800 mortgage is currently at 2.11%, and they're testing it at a stress tested rate of 3% above their standard variable, which could be 5% higher than the fixed rate. So it's not mortgage. Getting a mortgage isn't all that it seems. 9 times out of 10, 90% of the things that you see on your mortgage application, or 90% of the things that happen on your mortgage application, you won't see. So when you go onto these comparison websites, when you do your Google search for a mortgage, and you see this amazing interest rate, and you see those monthly payments are affordable, that isn't everything that goes into making a mortgage. There's a lot more things, stress testing being one of them. Now, the Bank of England has introduced that they are withdrawing stress testing from the 1st of August. So what I've seen, my reaction to that is that the reactions that I've seen to that I want to say laughable, but it's not laughable, because if you don't know how the mortgage industry works, then you can't really laugh at somebody for having an opinion on it. But when people are turning around and saying, this is ridiculous, it's going to cause another recession, it's wrong. You're wrong, because it isn't going to happen. There are too many things in the background that are not being scrapped that are going to stop, or are there to prevent a recession. Stress testing that is being scrapped by the Bank of England. That was probably the cause of, it's estimated 6% of all declines of mortgages, which equates to roughly 30,000 mortgages a year. In the grand scheme of things, it's not going to help that many people in the grand scheme of things of getting a mortgage. Why? So, the reason why, affordability calculators are still going to be there with the lenders. So lenders will still be using their affordability calculators. Santander will use theirs, Halifax will use theirs, Nationwide will use theirs. And you must fill them in correctly. If you're going to do this on your own, you need to know, are these affordability calculators, are they already calculating pensions? Are they already calculating deductions? Are they wanting my net income? Are they wanting my gross income? And there's a lot of work that goes into doing an affordability calculator. It's not just having a guess. And don't round your figures up as well. You need to put your accurate figures in there, because if you are keying in accurate figures onto your affordability calculators, then transferring them over to an agreement in principle, if you know they are not right, that is classed as mortgage fraud. It has to be accurate. Everything you put on your own mortgage application has to be accurate, and then it has to be backed up with pay slips, bank statements, etc. If it's wrong, it will probably get declined. Okay, so use a broker. Use a broker. Because the majority of people that get mortgage applications declined don't use a broker. So affordability calculators will still be there. Next one, income multiples. So income multiples will still be there. And you probably, I get a lot of people say, oh Mike, how much is it now? How many times your salary is it? Well, it depends on what lender you're going to use. Some lenders will use 3, some lenders will use 4, some lenders will use 5, but a lender is only allowed 10% of its business book to be lending over 4.5 times your income. So 4.5 times your salary is the average. And lenders have been told, and they continue to be told, that they are not allowed to lend 4.5 times, more than 4.5 times, to over 10% of their mortgage business. So 90% of the mortgage business has to at least be at 4.5 times income or below. So again, how are you to know whether or not that lender has hit the business back book, the business book of that amount? You're not, because it's not announced on Google. It's not announced on Go Compare the Market. Again, you're going in blind. Use a broker. Your brokers should be able to check this. We'll know if it fits affordability. We'll know if their calculators have been changed. We get told this information by the BDMs. BDMs being the business development managers. These are our personal contacts to the lenders. So we don't have to sit there on a service desk. We don't have to wait. We've got a direct contact that will talk to us. So back to what the headline is. Are affordability calculators being scrapped? No, they are not. Just one element of affordability is changing. That is stress testing. Again, it's affected 30,000 people on average. It's 6% of mortgage declines are down to stress testing. Personally, stress testing, it's neither use nor ornament. I agree with the removal of it, but I also agree that the other affordability calculations should stay where they are. We will be finishing off very shortly. I will finish off on this note, and that is, it was announced today by the Halifax that affordability is at a record low. So affordability is at an all-time low. If you are looking at getting a mortgage and you are doing it on your own, now is the time where lenders are lending the least amount of money. And the reason being is the cost of living has increased. All of the lenders have factored the new ONS data into their affordability calculators, the cost of living data, the new cost of living data into their calculators. Therefore, if you have not had a pay increase during this cost of living crisis, your borrowing power will be less than it was 3 months ago. If you got an agreement in principle 2 or 3 months or even a month ago and you still haven't done a mortgage application yet, it is highly recommended that you go back and do a brand new agreement in principle, because most lenders have now inputted new ONS data into their affordability calculator, and it could be that you apply for the mortgage that you've got an agreement in principle for, and you could no longer be meeting affordability, which would be an absolute loss of money, because any fees that you pay to a lender up front are completely non-refundable. So that is everything that I want to talk about tonight. Told you I'd keep it short. And thank you very much for tuning in and watching. I'll be back next Monday. If you can drop me a note on anything that you would like to hear about, I will keep a look at the headlines, and this week's headlines come in. I'm doing a speech at the Mansfield 2020 breakfast meeting on Thursday, where State and Mortgages are sponsoring the event, and I will be talking more about interest rates, inflation, and my take on what's going to happen with fixed rates in the future. If you are interested in that, then contact Mansfield and Ashfield 2020 and see if you can get yourself booked in for breakfast there on the business breakfast. But many thanks for watching us, and hopefully I'll see you all next Monday. Take care. Bye bye.